Another video. It's your boy Capital here, and today's video is going to be one of the special videos and one of the most value-packed videos where you would not want to miss out. But before we start the video, please don't forget to like, comment, share, and subscribe. But without further ado, let's get into today's video. Now again, like I said, today's video is not one of those you don't want to miss. But before we start, I know I have been missing for a while. It's been a while. I know. Where have I gone? I know I have just been, I've lost that momentum of posting videos on YouTube, but I'm back now. And then obviously, even better thing, I took a trade today and I decided to make a video about this trade because again, this trade was a trade that I took to use to sort of come from a drawdown on my account of about 7%. So I was in a drawdown 7%, and this one trade I took helps me come back to break even or sort of like back to my initial capital that I have for this sort of funded account challenge. But yeah, so again, this is a GBP/USD trade that we're going to go through step-by-step guide, what I found, how I found it, my biases, and both fundamentals and technicals were in line with price action and how I was able to then maximize on both fundamental analysis, technical analysis, combining them to then getting a nice 7% trade for my account. So yeah, without further ado, let's get into today's video. So again, this is a GBP/USD trade, but before we start, just want to go through sort of like from the introduction to the middle part to when the trade came through to when I then initiated my trade and when I took profit. Again, so to give you like a story, just give like a short anecdote of what the background of the trade is, what I saw, and how you guys can maybe use these things to then take a trade for yourself as well. Now, again, since I always trade London session, I always look at what's happened in the Asian session. And the first thing to always notice is the Asian low and the Asian high. So that gives me a good indication of where the nearest liquidity is resting at and what London session is most likely to do as well. Now, before we go into this, fundamental wise, we know that the Federal Reserve in the United States decided to cut its interest rate another 25 basis points yesterday on the 10th of December. So again, when interest rates are lowered, what happens to USD pairs? USD pair strength weakens, whereas the GBPs, the Euro USDs, and NZDs, the Australian dollars, all these major pairs would then strengthen us because if interest rates is reducing, what that means is that money becomes cheap, and when money becomes cheap, people wouldn't want to put their investments in the United States. They wouldn't put it elsewhere where interest rate is much more high because again, cash is seen as the most safe investments or whatnot. So that's more the investing too much. But I don't want to go into too much into it. But yeah, the Fed decided to cut rates by 25 basis points. So that then will then affect the US dollar, reducing its strength, and that will then plummet its prices over time, which is why it was one of my fundamentals that I was going into the trade. I was like, okay, since Fed has cut rates, I'm expecting a bearish sentiment for the dollar and a bullish price action sentiment for the major pairs that I normally look at, which is the GBP/USDs and Euro USDs. And obviously, if you're a trader, you can use the DXY as a sort of correlation to see what the DXY is doing, and you can then compare that to Euro USDs and your GBP/USDs price action as well. This can help you to know what price is looking for both these charts. But anyways, back to the video now. So we can see here, this is the Asian high we've marked out. This is the Asian low. So let me just mark that out here. And then the Asian high. So again, one thing that London always does, London always looks for the nearest liquidity to take out. And now before we can see here that we've got a sort of 5-minute area of demand. So this was the last candle that price sort of had before it pushed to the upside, creating the new highs during, I think this was the news session yesterday, just when that news came out of interest cut. So yeah, this is some sort of like an area of demand that we can then mark out as our area of interest that price will most likely come and mitigate. So let's see what price done during this London open here. So we can see London open is done, and London can see a clean sweep of Asian low, which is always another first confirmation. Whenever price sweeps off either the high or the low, price tend to reverse to go to the upper area to sweep the low, for example. So in this case, we know London has opened and London has swept the Asian low. What that tells me is that more than likely, price will most likely reverse to sweep the Asian high, because again, a lots of orders and a lot of volume are resting above these areas here. So we can see we've got area 1, we got another area here. So we've got the high here. So this is another resting liquidity here. And last but not least would be just the area that we have here. So again, these are all areas that has lots of stop losses and orders sitting here that more than likely institutional traders will want to sweep and take to obviously to accumulate more buy positions for themselves. So as again, London will open around this time again. So yeah, we can see a sweep of Asian highs. So the next thing to do is to see what price does to this demand zone that we have here. So let's see what price does. So price mitigates the demand zone. We can see a nice bullish candle, engulfing candle, which obviously tells me that price is looking to sort of push to the upside. Now, again, usually what people will do is that they will mark out this area as a point of interest or a supply zone per se. Now, the reason why you need to be careful is that, for example, just because this high created a new low doesn't always necessarily means that this high is a very strong level, because that's what a lot of traders tend to misunderstand by, breaker structures and liquidity. Yes, in fact, price did break this area here, creating a new low, because price did close below above the previous low. But we need to bear this in mind. When sessions open, a lot of lows become liquidity sweep areas rather than breaker structures or continuations. A lot of areas of point of interest becomes liquidity zones where all stop losses are resting above these areas, and price will then use this as an advantage, or institutional traders will use these areas as an advantage to accumulate more buy orders and then push price to their intended direction, which is to the upside in this case. So again, because I knew this, I knew there was no I knew not to take any sales in this area, because again, first, price has respected this demand zone. Asian low has been swept, which is another confirmation that more than likely price will reverse to that Asian to take out the highs here. So therefore, this area will definitely be not favorable for me if I was to take any sales. And without further ado, let's see what price did in this area. So we can see, first of all, when price comes to your supply zone with huge bullish or bearish candles, this is always a sign to never take the trade, or never to consider that area as a possible interest, because more than likely price will not respect that zone that you've marked out, whether it's a sales, whether it's a supply zone, or bullish, or bullish or demand zone. So these are the things that you always need to be very, very wary of price, especially when you're trading lower time frames, because more than likely these zones are just like a smart money trapped areas or supply or liquidity zones that price will just use to accumulate more orders and then push back to the upside here. Now again, so what then because I knew this area would be a fake supply, I was then waiting for a clean area, a clean breaker structure around this area here, and then I would then look to maximize or take a trade in. But let's see what price did when I was sort of like waiting for it. So we can see we've had a clean breaker structure. So in theory, this should have been my area here. So this area here should have been my first area that I should have taken my buy trade, with my stop loss just below the wick and first TP aiming at the Asian high, which would have been an easy trade, perfect, simple. My morning is done. Literally within a few minutes, or maybe probably an hour, I would have hit TP, but I missed this setup here. So let's see what price did if I was going to take this trade. Price would have bounced up to my area. Nice entry. We've had a nice bullish engulfing candle, confirming that price is still very bullish. As we can see here, I would probably just move my entry to break even at that point, and then just wait for that ride to go and hit our TP. And let's see what price did. Or my second entry would have been this area here, where I would have just marked out as my second entry, put my entry price here, put my stop loss just below this area, and then maybe target like 1, 2, for example. Again, if I'm just looking to trade that Asian high as my TP, I wouldn't want to be in it. I wouldn't want to sort of risk more or sort of be in a trade for too long. So maybe like a 1 to 3 squeezing if you're trying to be tight. But again, 1 to 2.5 would have been enough to, get a nice entry here. But let's see what price did. So we can see price came back, respected that area of demand. So these could have been easy, at least a 5 or 6% trade I could have taken here, but I missed both of these setups because obviously I was distracted by other things. So again, these are things that you can do as a trader to get trades like this, so you can get your nice 5 to 6% in the morning just by trading areas of liquidity used as a point of interest, and then just finding a nice entry risk to reward ratio of 1 to 2, 1 to 3, and then banking those and calling that a day. So again, these are things that you can do as a trader to maximize and catch trades in the morning, because usually what smart money traders will try to do will try getting an entry around this area here, and I'll put the stop loss somewhere here and then ride it out to the average hand. But when you miss the first initial breakdown or the first initial mitigation of your demand zone, you can still always find areas to enter. You just have to know what you're doing and looking at. But let's go on to the part where I found my entry per se. So once I knew that price was going to take out Asian high, this is when I started to sort of like look at where can I find an entry to take my trade. Now, again, I missed the first setup here. I missed the second setup here. So I believe my entry came in once I knew that the Asian has been tapped, and I knew that there's a confirmation. And what was my confirmation? This candle here. Once I seen this engulfing candle here, this gave me my confirmation that I needed. So I entered my first trade was just, I think it was just above the wick here. So I think it was yeah. So my first entry was just above the wick, and I put my stop loss here, and then I targeted I believe, yeah, so just right here. So this was my first entry. So this went to my first entry, and I believe my second entry is when price pushed a bit. So yeah, my second entry I believe was here. So when price pushed and came back, and because I knew, and I was very, very confident that the price would play out as I wanted to. And I think my second TP was just here. But again, because I risked a bit 0.5% on my second trade, because I didn't want to over risk or over leverage my account, because I was already in a 7% drawdown. So I was trying to maximize my trade, however, being smart and being very, very aware of how much my account was in. So I need to be very, very smart. But this is how I was able to catch my trade. And without further ado, let's see what price did just before Asia New York session opened. And yeah, and just like that, guys, I was able to catch a nice 1 to 5 or 5 or 6% trade on my 100K funded account challenge. But again, following the volume, following where liquidity is left, and where we can then maximize on our trade using these simple steps. But again, if you guys like more videos like this, if you guys want more content like this, please don't forget to like, don't forget to comment, don't forget to share. Guys, I need 500 subscribers by December. I know we've got about maybe 2-3 weeks left in a year, in the month to 2026. I would highly appreciate if you all subscribe to the video and like and comment and do all the nice stuff. And I also leave like a proof of when I took the trade and during the trade, and when I hit TP, so you guys can sort of see what happened when I hit that 7% on my account. But yeah, without further ado, it's your boy Capitals, and I'm out. Peace.